Grow your money. Hey there, future millionaires. Are you ready to take control of your financial future? Ever wonder how to make your money work harder than you do? Imagine your money not just sitting in a savings account, but actively growing. That's where investing comes in. It's like giving your money a job that can potentially bring in more money. Think of it like planting a seed. You nurture it, give it time, and watch it grow. That seed is your money. The more you plant, the more you can potentially harvest. Over time, it can grow into a mighty tree, giving you sweet, sweet financial fruit. Imagine reaping the benefits of your investments in the future. Investing in the stock market is one of the most powerful ways to build wealth over time. It's like having a piece of the global economy. It's like joining a club where you can own pieces of amazing companies. These companies are constantly innovating and growing. These companies use your money to grow their business, creating products and services that people need and love. In return, your investment grows too. You can earn dividends and see your stock value increase. Now, I know what you're thinking. Investing sounds complicated. It can seem like a maze of numbers and jargon, but trust me, it doesn't have to be. With the right resources and a bit of patience, anyone can become an investor. With a little guidance, anyone can learn the basics and start growing their money. There are countless tutorials, books and advisors ready to help you. So buckle up, Buttercup, because we're about to embark on a wild ride to financial freedom. The journey might have its ups and downs, but the rewards can be incredible. Ready to learn how to turn your pennies into profits? Let's dive in. Together, we'll explore the exciting world of investing and unlock the potential of your money. Before we jump into the exciting world of investing, let's get familiar with some key terms. Don't worry, I promise to keep it simple. First up, we have stocks. Stocks are like tiny pieces of ownership in a company. When you buy a stock, you're basically becoming a part owner of that company. Pretty cool, right? Next, we have bonds. Bonds are like loans you give to a company or the government. They promise to pay you back with interest. It's a bit less risky than stocks. Now let's talk about brokerage accounts. A brokerage account is like your personal investment hub. It's where you buy and sell stocks, bonds and other investments. Think of it as your one-stop shop for all things investing. See, those basic terms weren't so scary, were they? Now let's move on to the fun part, opening your very own brokerage account. Ready to start your investing journey? The first step is to open a brokerage account. It's easier than you think. There are tons of brokerage firms out there, each with its own perks. Some popular options include Fidelity, Schwab and Vanguard. Do your research and choose one that suits your needs. Opening an account is a breeze. You'll need to provide some basic information like your name, address and social security number. You'll also need to link your bank account to fund your investments. Once your account is up and running, you're ready to start buying stocks. It's as easy as clicking a few buttons. But before you go on a shopping spree, let's talk about the different types of stocks you can invest in. See? Opening a brokerage account is simple and straightforward. Now let's explore the exciting world of stocks. Now that you have your brokerage account, let's talk about the stars of the show stocks. Stocks are essentially shares in the ownership of a company, and they come in two main flavors. There are two main types of stocks, common and preferred. Each type has its own unique features and benefits. Common stocks are like the popular kids in school. They're the most widely held and traded type of stock. They're the most common type of stock, and they give you voting rights in the company. This means you can vote on important company decisions like electing the board of directors. You get to have a say in how the company is run. This can be a powerful way to influence the direction of the company. Plus, if the company does well, you could earn dividends which are like little bonuses paid out to shareholders. These dividends can grow over time, adding to your investment returns. Preferred stocks are a bit more exclusive. They are often seen as a hybrid between common stocks and bonds. They usually don't come with voting rights, but they offer a fixed dividend payment. This means you get a steady income from your investment, regardless of how the company performs. It's like getting a guaranteed paycheck from your investment. This can be particularly appealing for investors looking for stability and predictable returns. Both types of stocks have their pros and cons. Common stocks offer the potential for higher returns, but they come with more risk. Common stocks offer more potential for growth, while preferred stocks provide more stability. Preferred stocks, on the other hand, offer more stability but usually have less upside potential. The best choice for you depends on your individual investment goals. Are you looking for growth, or do you prefer a steady income? Understanding the difference between common and preferred stocks is crucial for making informed investment decisions. Knowing what each type offers can help you build a balanced and diversified portfolio. Now, let's explore some popular investment strategies. These strategies can help you maximize your returns and achieve your financial goals. Section 5. Investing Strategies. Finding your approach. This section will guide you through the process of finding the right investment strategy tailored to your needs. Now that you know the basics of stocks, it's time to develop an investment strategy. This is where the real fun begins as you start to shape your financial future. Think of it as your game plan for conquering the stock market. Just like in chess, every move should be calculated and strategic. One popular strategy is called buy and hold. This approach is favored by many seasoned investors for its simplicity and effectiveness. It's exactly what it sounds like. You buy stocks in solid companies and hold onto them for the long haul, even when the market gets bumpy. Remember that tree analogy? Just like a tree, your investments need time to grow. This is how you let it grow. Patience is key here, as the value of your investments can increase significantly over time. Another strategy is dividend investing. This is a favorite among those looking for a steady income stream. This involves investing in companies that pay out regular dividends. These payments can provide a reliable source of income, especially during retirement. It's a great way to generate passive income from your investments. Imagine earning money while you sleep. It's like having your money work for you while you sip lemonade on a beach. The ultimate goal is financial freedom. The best strategy for you depends on your risk tolerance, investment goals, and time horizon. Everyone's financial journey is unique. Don't be afraid to experiment and find what works best for you. It's all about learning and adapting. Remember, investing is a marathon, not a sprint. Consistency and perseverance are crucial. Choose a strategy you're comfortable with and stick to it. Confidence in your plan will help you stay the course during market fluctuations. Section 6. Researching stocks. Don't just throw darts. Choosing the right stocks to invest in is crucial for your success. You wouldn't just walk into a store and buy the first thing you see, would you? The same goes for stocks. Before you hit that buy button, take some time to research the company behind the stock. Look at their financials, read their annual reports, and understand their business model. Pay attention to their earnings, revenue growth, and debt levels. These are all important indicators of a company's financial health. Don't be afraid to consult with financial advisors or use online resources like Yahoo Finance or Google Finance. Knowledge is power, especially in the stock market. Remember, investing without research is like gambling. Take your time, do your homework, and make informed decisions. Section 7. Don't put all your eggs in one basket. Diversification is key. You know what they say. Don't put all your eggs in one basket. This couldn't be truer in the world of investing. Diversification means spreading your money across different types of investments. This helps reduce your risk. If one investment goes south, you won't lose everything. Think of it like this. If you put all your money into one company and it goes bankrupt, you're in trouble. But if you spread your money across different companies, industries, and asset classes, you're more likely to weather the storm. Diversification is your secret weapon for building a resilient investment portfolio. Don't underestimate its power. Remember, diversification is your best defense against market volatility. Spread your bets and watch your portfolio grow. Section 8. Time is your friend. The power of long-term investing. Investing is not a get-rich-quick scheme. It's a long-term game that requires patience, discipline, and a belief in the power of compounding. Compounding is like magic. It's the process of earning interest on your interest. Over time, even small amounts of money can grow exponentially. The earlier you start investing, the more time your money has to compound. So don't wait for the perfect time to start investing. The best time is now. Remember, time is your greatest asset when it comes to investing. Start early, stay invested, and let the magic of compounding work its wonders. Section 9. Take the leap. Start your investing journey today. Congratulations. You've reached the end of our crash course on investing in the stock market. You've learned the basics, explored different strategies, and discovered the importance of diversification and long-term thinking. Now it's time to put your knowledge into action. Don't let fear or procrastination hold you back. Start small, learn as you go, and enjoy the ride. Remember, investing is a journey, not a destination. There will be ups and downs along the way, but with patience and perseverance, you can achieve your financial goals and secure your financial future. So, what are you waiting for? Open that brokerage account, start researching companies, and take the first step towards becoming a savvy investor. The world of investing awaits. Go out there and make your money work for you.